fabulous, amazing episode of Legacy Kings brought to you by Orlando Mills. And
SSJ.
on this episode today, we have a very, very special guest for y'all. She's gonna bring so much fire and heat. Y'all better hold on, because if not, hey, I feel sorry for you, but we gotta be, we gonna bring y'all back on. So, hey, I don't really need to introduce her like that, but I am gonna introduce her. But she's just so amazing. And her name is Shateka, and I will allow her to introduce herself and to let y'all know who is she, what do she do, and things in that nature.
All right. So is it on me now? I get to talk?
Yeah.
I have a bit of an echo, so I apologize. I'm going to turn this down. So thank you so much for allowing me to be here tonight. This is super exciting because I really want to be able to pour into the next generation, really kind of talk about some of the topics that you guys have been bringing. I mean, you guys are on it. I'm just excited because, Legacy Kings is what it is. I mean, talking about finances and how to win and wealth, that's one of the things that I love to talk about. And so anything that I can do to contribute to what it is that you guys are doing, and especially to your generation, because I wish I would have met me when I was 20 or 30 years old, but unfortunately I didn't. And I made some decisions that if I had to turn back time, I would make a little bit different. Someone that has, invested in real estate, was able to leave corporate after, having the six figures and doing all that six figure stuff back then, which was what people are doing now is the millionaire status. I did well with real estate investing and stocks, but I didn't know about what we're going to talk about today, because, our people don't like to talk about this. We like to talk about term,
Hey, that's crazy.
That's the rest. And that's not the way to go, always. Unless your situation warrants that. And some people, that is. And I'm going to tell you some reasons where you want to use term to leverage your death benefit as much as possible to grow that. But let's get into it. I'm ready to just slide right on in and talk about it.
Hey, let's
because
get it.
I can go. You don't have to ask me no questions. I can just talk. So, but I want to slow it on down.
Hey, look, you sound like me. I can just talk too. So we got two people that just talk. But we go talk the right talk. So that's what's about, talking that right talk, getting y'all to the next level, getting y'all to that next tier, getting y'all all the way up to the top. Because we've been at the bottom for too long, y'all. Woo. Way too long. We gotta get to the top, and I mean that, y'all. I just want y'all to pick up what we're gonna be dropping down on y'all today, and that's what it's about. So I want to get straight into it, right? So I want to know about annuities, and can you break that down to our audience and for the listeners that's listening to us right now, please and thank you?
Yes, absolutely. So everybody knows about the annuity that's government funded. Can you guess what that is? Social Security. So Social Security is an annuity. Why? Because it pays you for a lifetime. An annuity is simply something that's going to pay you for the rest of your life. And it's funded by the government, but we don't believe it's going to be around much longer. And we're thinking we're about 2025-ish, but nobody knows exactly. And so it's important for people to have their own annuity, to fund their own annuity themselves. And so that's what we're going to be talking about today. Annuity is really one where it can be an IRA. It's an IRA, I should say. It's an IRA. You can use that terminology synonymous with an annuity. In other words, it's an individual retirement account, individual retirement account. So you actually have what's called a qualified plan. Most people know about them. They're employer plans. Okay, so qualified plans are employer plans, i.e. a 401k, 403b, 457, depending on what industry you're in to determine what 4 you are. And all of those are employer plans, and because they are qualified plans and employer plans, they can actually be rolled into what's called an annuity, so that you can then be able to formulate your own income for the rest of your life. So a 401k we know that's going to run out, right? It has an expiration, because by the time you take out the taxes and the fees and what you need from it, emergency funds and all that, you don't have a 401k anymore. But what if you could take that a dollar amount that's in that account and be disciplined, because you can no longer touch it because you rolled it into an annuity. And oh, by the way, annuities give you a bonus of anywhere between 4% and 10%, depending on what state you're in. So that's a nice little bump to add to it. And oh, by the way, some of them also have living benefits, which we'll talk about when we talk about policies. Most people don't know about, because in retirement age, most people's bodies begin to break down so that when they become chronically, critically, or terminally ill. In other words, heart attack, cancer, stroke, dementia, Alzheimer's, all these different things, they end up going bankrupt. 69% of bankruptcies are caused by medical expenses. Okay. So if I could get you into an annuity that has living benefits, okay, then you got more for your money, because your 401k wasn't going to give you that. Your 401k, you could possibly lose your money. People are crying because they lose $300,000, $800,000 in their account because of market volatility and risk. Okay. But what if there was a safe haven, like an annuity, where you never have a loss because it's an index product, but you only participate in the market when the market goes up. You do not participate in the market when the market goes down. People find this super attractive. And you can, again, move it to your next generation, as we know, with some of the same similar qualities of an index universal life policy. You can actually structure it to have a co-owner, being one of your children or your spouse, however you want to do that. The way the annuities are structured, you can name different owners on it, just like you can with a policy. All right. But again, it is something that's going to, it can pay you for the rest of your life, or you could just have it to be one that's just asset based, where it's not one that you want to turn your income on. You just want it to be a growth product for your money. Okay. Because you have some that are doing 200% participation rate of what the market is doing. Phenomenal growth. Okay. So people, a lot of times they look for annuities that they want great growth, but they don't want to lose any money. And that is why there's an index annuity. All right. That's what we're talking about today. Index annuity, not just a regular one. Because somebody may say, oh, annuity, we lost money. Yes, you probably did, because you didn't have an index annuity, which means that you cannot lose money. The contract tells you can't lose money. And oh, by the way, they will give you your money back in some contracts if they see where it's not performing. So annuities are super attractive for that reason. And of course, they're state regulated. So depending on what state you're in will determine what types of annuities you can even get into. For example, I had a client that wanted to do $340,000 rollover into annuity to turn it into an income. Well, she was in California. California is one of the strictest states. They don't want you to do that. They didn't want you to do, incomes. That has since changed. But again, there's some restrictions in some states like California and Idaho, and so just to understand like where you are, where somebody else is and what they have may not be where you can get based on where your state is. But the basis of an annuity is simply to be able to put your money somewhere that's a qualified account that you can be able to roll from an employer plan to now have full autonomy, full control. All right. But at the end of the day, once you put it in there, it's like a contract. You don't get that out. Okay. Right. People like bonds, CDs, you have a contract. That's what you have. And so once you put your money in there, you need to be clear that whatever you put in there is going to be stuck. Okay?
So please check me if I'm wrong, right? So from what I'm hearing from you, right, it kind of like registers to like a whole life a little bit as well too, right? Or no?
No, not at all. Because a whole life is actually a policy. We're not talking about a policy. These don't come with death benefits. These don't come with, if you get lawsuit, there's no protection. A policy is protected from divorce lawsuit. It's protected against, creditors coming for you. That's why the wealthy, when they go bankrupt, they have all these different creditors coming for them. They make sure that they have what they want to keep inside of a policy. The policy is tax free. The annuity is not. Okay, you have to pay taxes as well on that unless you put it into a Roth annuity, and you can structure it that way.
The Roth IRA.
Yep, Roth IRA, Roth annuity. Okay. You can put it in there because those are all qualified plans that have once been with an employer somewhere, or and so you wanted to put it into an annuity, and so that's what they are. You can do some that are not from an employer. You can create your own, right? That's the other thing. You have the autonomy, right? It's your money. You can create your own annuity without having ever been with an employer. But it's just different types of annuities. It's so many different types of annuities. It's unbelievable. So I'm kind of giving you kind of a general consensus of what most of them are, what they're going to do.
Okay, so I have a great question for you, right? Yes. So my question is this, right? So what type of annuity would that be or consider, or what umbrella would that fall underneath of with like life insurance companies and things of that nature when like because like for example, Mass Mutual brought 100 million worth of Bitcoin, so that 100 million went to 300 million. But obviously we know where it's at right now. You know what I'm saying? But like because they said that it went into the annuity, so I just want to get a better, clearer understanding of that. Yeah. So could you break that down just a tad little?
You're talking about a corporate annuity, is what they were talking about. I guess. Okay. So normally we work with individuals, not necessarily corporations when it comes to annuity. I have not done that yet. Okay. So, but an annuity is one where you could turn on, again, the income, or you can let it sit and grow. The goal is to never lose money. Warren Buffett says rule number 1 is to never lose money. And he said rule number 2 is go back to rule number 1 and never lose money.
So, never lose money.
So the wealthy are not going to lose any money. So they're going to put their products, their money, their accounts inside something that's going to be an index product that we probably never really touch because we were talking about some term stuff that, you know, it's not a payout. But an index universal life policy and an index annuity is going to keep you from losing your shirt, right? So that's the reason why people put their money there, because they want to have a basis. So you have to figure out what is your risk tolerance. And my risk tolerance is 0 for some people, right? Not me. Yeah. I'm high risk. I'm your crypto girl.
Hey, come on with it, Crypto Billy. Come on, talk to me.
Yeah, look, I want aggressive growth and I want some risk. Okay,
come on,
it'll cost you something.
Hey, we gotta play. Hey, we on offense now. We've been on defense too long now. We gotta come over.
Yes, we're going forward.
We gotta do something now. So hey, come on with it. The opportunities is here. But you got the floor again, though. I just want to say that.
Yeah, so for real, like seriously, so annuities are very attractive if you someone that's risk averse. That's why they have it in an annuity. Listen, if they got it in crypto, that's volatile. That's like up and down. You know what I'm saying? It's a roller coaster ride right now. So nobody knows where it's going to land. They're hoping it lands somewhere. We know it is because banks are involved, right? But it's just going through its beginning stages, like most things do. But an annuity is more stable. It's one where there's longevity. It's buying your income in the future.
So it has a track record.
Yeah, you're buying your income in the future because you're going to put a certain amount of money in it for it to grow. And then later you can turn that thing on, what is called an income benefit rider. Okay. You can turn on your income and be able to get income off of what it already made for you, as well as the principal amount. That's what an annuity is. Social Security, you paid it in all those years. And finally at 65, you could turn on your lifetime income benefit. Same thing with an annuity. That's all it is. You are buying your income in the future by investing your money today so that tomorrow you can be able to live like there is no, you know what I'm saying? So you have to sacrifice a little bit of money today so you can play later on. So you don't have
look, though, you said sacrifice.
So listen.
People ain't want to sacrifice.
Say again?
I said people don't want to sacrifice. You said a strong word. You said sacrifice.
Let me tell you something. People want to look good and act like they have what they don't have.
You see all my gold I got on? You see all this?
You see my car, but you don't see my house. You don't see my... I ain't even going to go there because I don't want to offend nobody. But at the end of the day, you want to make sure that you have what you say you have. Nobody didn't need to know what you have. Listen, Sam Walton didn't ride around in no Benz and no Bentley and no Rolls Royce. Sam Walton was the owner of Walmart. He had a raggedy truck until he died. He was 87 years old. I worked for Walmart. You know that, right? As a store manager. So I know the story about Sam Walton. And who else got more money than him back then, you know? Yeah. I mean, come on now. So people around here, Florida, they have money. That money could be in your annuity account growing for you. So when you get, nobody wants to wait to live when they're 65. Like, I get that. I get it. You know, absolutely. If you have an index universal life policy, you can put that money away. And when you want to, use it for whatever, rather it's an investment product, i.e. if you want to buy some real estate, you want to buy, a car at an auction to put it on Turo. You can invest the money that you make on your policy because it's going to grow tax-free income for you so that you can now take that money and go put it somewhere else. But instead of you doing that, you want to go and buy some liabilities. We don't want to do that no more in 2020. Right.
And I want to ask
you over liabilities. Everybody's seeing the little t-shirts around. Okay. But we really mean that. In our community, we have got to stop that. This is a mindset shift that has to change.
Paradigm shift.
I've always been one to say, you know, I can care less about a car. That's just me. You know, I want put me in a house where I can retreat, you know, so I don't have to never go nowhere. I can go from one room to the next room. That's so, but it depends on individuals' preferences and what they would like, you know, and I understand all that. But just make sure that you can put your money in something that's going to grow for you while you sleep. Because unless you figure out a way to make money while you sleep, you're going to work for money all the days of your life. Warren Buffett, okay? However, you know, when you look at that, how are you going to compound your money? Because inflation is what? Anybody know what inflation rate is today?
Almost 7%. Like it's
okay,
super.
So are you making that inside your bank account?
No.
Hey, that's super high. So they got to figure that out.
Even if you have an online bank account, which has the most interest payout, you're not making that in an online bank account. So
yeah, not even on Redneck Bank, and they one of the ones that really give you a high interest on your money. So like, yeah, like that's the only one I could really think of, Redneck Bank, out of like Ally Bank and the other ones. But yeah, like they definitely.
You want to make sure that you outpace inflation. What's going to outpace inflation? What kind of account do you have that's going to outpace 7%? It's not going to be a whole life policy. It'll probably be an annuity. It'll probably be an index universal life well before it's a whole life. And these people out here selling this infinite bank, but these whole life policies, why? 3 to 5%. Now you have a guaranteed death benefit with a whole life. That's the difference between that and an IUL. Guaranteed death benefit. If that really bothers you or concerns you because you don't have the discipline about your cash value, then you need to be in a whole life all day long. Because you don't want to lapse your policy because you one of these people out here with these negative bank accounts and you got a negative bank account inside your IUL, you're not going to have an IUL. So you don't need that if you have those types of behaviors and that type of discipline. That's why a lot of people are concerned and they got to have the whole life but at the end of the day, R. Nelson, who founded this infinite banking concept, they had contracts for whole life policies only. They can tell you an IUL if they wanted to. Which means, or were they really fiduciary? They stuck to one type of product our whole life. I just wanted to park there for a second because it's not making people the money that they need to be able to now become a bank. You need to have that in an IUL. And you're going to get more death benefit in an IUL than you're going to ever get with a whole life all day long. I don't care if you're going to get this little dividend because you paid too much into the policy. Okay, I don't care about it. Because at the end of the day, it's just like saying, oh, I paid too much taxes, but I'm getting a refund. People getting excited about these refunds. Why? Because you paid too much money into the taxes. You could have been investing that money somewhere else and making money for you all year long while you sleep. So you can get up these JOBs and stuff.
And that's key because like, that is so key. Like we got to be able to make money while we sleep. Because if you don't make money while you sleep, you forever for work. So like, you ain't got to be no entrepreneur. You ain't got to start a business or anything like that. Like I tell most people, I'm not the smartest, I'm not the brightest, you know what I'm saying? But guess what? I know people out there that's billion and trillionaires and they running Apple and Microsoft and AMD and a whole bunch of other companies that's out there. So it's like we could invest with them, you know what I'm saying? So we don't have to make it so difficult and hard for us to be able to continue to go to work and that's all we do. And then when Friday comes, hey, what you doing today, cuz? Like, you trying to go out? It's like somewhere down the line that get old. So come over here where it's new and hip and cool, and it will always be in forever because rich is temporary and legacy is forever. So when you coming over here, you tapping in with Legacy Kings, that's what it's about, y'all. We over here, we building a legacy, not only for us, but for our families. This is for our ears. So do you want to be able to be out here? You want to be lazy or you want to be a hustler? Hey, you gotta go find you a hustle. Do you understand? So, hey, if you don't, hey.
Listen, I had a whole lot to say, but you know what? Listen, you all over it. Bottom line is you got to figure out a way to make money while we're sleeping. And the tax code is written for the business owner. It's not written for the W-2 employer. It is not. Sorry, but not sorry. You need to understand that. Like, I was someone that worked in corporate for many years. I was an Army officer. I worked for corporate executive, all that. So I made some money, but I paid almost 50% in taxes. So somebody should have told me that if I would have just had a hustle, because when you single and you don't have no children, you pay a lot of money. All right. But if somebody would have just told me, you know, get a little side hustle, Shateka, you know, business owners are winning out here. 475 deductions. You don't get that, but as a W-2. Sorry.
No, you ain't gonna get that with no W-2.
Yeah, you're not gonna get it. And so when you look at Rich Dad Poor Dad and the book and the 4 quadrants, and he talks about how the left quadrant versus the right quadrant. Most people, 95% of people are on the left quadrants, right? Top
yes,
and
can
bottom.
we name the
Business
we want to name the
and self-employed, meaning that you're trading time for money. How long can you trade time for money? How long are you going to do that? Because at some point you may not be able to have the ability to make the money, especially if it's physical. So you got to figure a way to make money while you're sleeping. And if that means putting it inside something that's going to grow aggressively for you, that's what you need to do. If that means you have to do a side hustle, whatever it is, but the tax code is written for the business owner. You got to move from the left side to the right side. The right side is the business owner and the investor. The investor don't do nothing but invest his money or her money. The business owner don't touch a thing. They are the CEO, meaning they create employment opportunities for other people to be able to work. And only thing they do is call the shots. So some of y'all CEOs on these people's jobs, but you could be a CEO in your own business. You shortchanging yourself.
Oh, you talking spicy. Come on with it. You
Somebody should have told me. Look, I just wish I would have known this, 40 years ago.
Yeah. Hey, you definitely helping us out. You helping our audience out. You helping the listeners out because they need to hear this. And hey, I need to hear it too, y'all. So I ain't just trying to throw y'all underneath the bus or anything like that. So that's what we brought Shateka here for y'all to be able to pick up on her wisdom and her knowledge and what she's bringing to the table. And hey, she's bringing a lot to the table, y'all. So hey,
also, I want to take a step back for a second. So
yes,
with the annuities, okay, so just for say we have some older people listening or somebody that might be interested who can't get a life insurance policy.
Right.
What would be the minimum amount of money needed to put into an annuity?
That's a great question. $5,000 for the products that we have.
Okay.
Yeah.
All right.
Yeah.
Also, going back a second, we jumped straight into it. So you're not just a life insurance agent, but you're a broker. So
I'm a broker. I'm a broker all day. Yes.
You're a broker. So
I'm not captive. I don't work for New York Life. I can't just only sell you New York Life products. I can sell you. I don't work for State Farm. I can sell you over 80 different companies. All right. So I'm not restricted. Based on what you tell me your vision is and your budget, we have something for every budget, right? And getting back to that annuity, I know we have, there are some annuities that's going to be less than 5,000. So let me just say that I would have to do a little more research on it because the ones that we work with primarily is 5,000, but there's some I'm sure that you can start off less than that.
I just wanted the people to have a general idea, kind of gauge and see, where finances lay and what they might be able to do compared to, like you said, just going out and just getting a term or getting a savings account or something like that.
Well, let me talk about that term a little bit because it works for who it works for, right? We don't want to bash term. Listen, I still got my term. Let me just be real transparent. Right. Even though I know it's only a 98%, like I know I'm probably going to outlive it. As long as I live beyond 95, whoever sold me that did very well because that's well more than 30 years. But on average today, a term policy only lasts about 30 years. They did have some other ones that came out that's 40 years, but 98% of people are going to outlive their term. And so there's only a 2% payout on term policies. If you have to have a term policy, have two things with it. Number one, make sure it's a return on premium type, term where you can get your money back after, 25 years. Okay. It might be 65%, it might be 95%, just depending on the carrier, but you want to get your money back. All right. And put that somewhere else. So make sure it has a return on premium feature, ROP. And then also make sure that it's upgradable. So let's say, you may not be able to afford a great product that's going to be able to grow interest for you and all that good stuff, like a permanent policy for this year, but next year you may be able to, or maybe in the next 5 years, depending on the carrier, 1 to 5 years, you could take those premiums and now apply it to the permanent policy so it doesn't go to waste. Because otherwise you're making a donation to these carriers. They're just getting rich off of you. And you don't want them getting rich off us no more, right? Like we don't want that to happen. So we want to make sure that we place our funds inside an account that's going to make money for us from the beginning as much as possible. But where that is not affordable, we understand, just have some coverage, that's the most important thing. So people also get term because it's less expensive. I get that. They want to have $1 million policy. It's like wealth on sale, right? So you can nowhere else can you put your money inside something and be able to have $1 million policy. You know what I mean? Over a short amount of time. So it is a great deal for the person who is 4. If you're someone that's looking for medical benefits, you're looking for basically forever income and things of that nature, something more permanent. Then of course you have these other types: whole life, index universal life, variable. I don't like variable because you can lose money just as much as you can make money in variable universal life. Because the models are after the stock market. So you actually sort of investing your money in the stock market when you have a variable universal life policy. So I don't particularly care for those personally, but who is for, because some people love it because they make a lot of money, but you can lose a lot of money too. All right. So that's the only policy where you could definitely lose your money. So I would say wonderful thing about the whole life, again, for those who might just be tuning in, is that the whole life policy is going to give you a permanent death benefit. A guaranteed death benefit. Let me correct myself. Guaranteed death benefit on a whole life policy, but you're going to spend more money in your premiums for that guarantee. Okay, so you're going to get less of a death benefit for a whole life policy. Okay, with the index universal life policy, you're going to have to make sure you don't go into a negative with your cash value. In other words, taking out too many loans, because when you do that, you can cause your policy to lapse if you can't properly fund it and you take out too many loans.
So how many loans is too many loans? That's what I want to know.
You go into a negative. Literally, when you see yourself getting real low, when your balance getting low inside your bank account, you're not supposed to be trying to go. Listen, you trying to play Russian roulette with your debit card that low. That's what I'm talking about. So we don't want you to do that with your index universal life policy, because all those years you've been paying into it, you won't have it no more. Yep. So the whole life policy, again, less death benefit for the same amount of money, only 3 to 5% growth in a whole life policy. I don't care that you're getting these little dividends that you're getting excited about because you paid too much into your insurance. Index universal life is going to be anywhere between 8 and double digits. We've seen them as high as 27%. So you're going to get about a double digit, growth inside of an index universal life. So the difference between the two is that, really, if you had to just put it in a nutshell, the cost of insurance, I don't care who you are, is going to be higher the older you are. So when it comes to an index universal life policy, you want to make sure that you max fund it as much as possible. So when you're in your older age, 70, late 70s, 80s, or whatever, if you're not using it for a lifetime income benefit rider, which is your income, your insurance annuity, if you will, if you're not going to use that feature, then you're going to have to make sure that you kind of overfund in the beginning years so that you can make sure that it'll pay for the cost of insurance when you're older, because the cost of insurance is significantly higher when you're in your 70s and 80s. It's going to start eating away at your cash value if you don't have that lifetime income benefit rider turned on. So when you turn on that lifetime income benefit rider, you already know what it's going to get down to based on how old you're going to be. But you will never run out of money with a lifetime income benefit rider when you turn it on. So it doesn't really matter in terms of the interest and how old you are and all that kind of stuff. But if you don't turn that on, then it can become an issue, So that's
what exactly is a rider? Not to cut you off, but what exactly is a rider for those who might not know?
Yeah, that's a good question. So riders, there's all types of riders. That's a whole class. Riders are nothing but benefits that you can add to your policy. So if you have children, you might want to have a children's policy. Children's rider. So let's say, you will have a death benefit on your children. And it's going to be kind of like a term policy, so to speak, on your children till they're a certain age, till they're like 26 years old, and then they get their own, policy. I say 26 years old. It depends on the carrier. Different ages, but around that age, 16, 18 is when is the youngest that they can get, like an adult type, if they wanted to get their own. But you can actually get your own. You can actually get an IUL for a baby as young as 15 days old as well.
Yeah, 15. I was gonna say that too, but
15 days old. The rich and the different mindset of the people are going to put a policy on their child. They don't look at their children as a liability. They look at
them as an asset.
Yeah, total different mindset.
See, and it's crazy that you say that, right? Because this is what I was gonna say. Because like this is what we need to do. Like we at our dinner table and everything like that. We need to come together at our dinner table It's about our household. It's not about what's outside this household. We gotta focus about what's going on in here first and foremost. And then once we figure out these wealthy strategy ways to be able to gain wealth and to be able to gain and have a higher network as well too. Like we need these principles and we need these policies and things of that nature to be able to take it to the next level. And if not, it's going to be sad because like you said, we talking 15 days old. Like the elite already think 10, 20, 30 years ahead. So it's like we so far behind, like we just stuck like this. It's like, come on, like we got to get this all the way together, y'all. Like we just take time. All it is just take time and do you really want it? And instead of like, to me, I don't like, me personally, I don't like the life insurance because it's a dead peasant insurance through your employer. So I'd rather just go with a different type of policy that you own instead of the employer owning it. You get what I'm saying? Because
you're a smart man. Because your employer, your employer insurance for the most part is rented insurance. See? And so you no longer rent it when you no longer work there for the most part. Now you do have some employers that have these robust type insurance plans for their executives and other people, but for the most part, it's rented insurance and you don't own it.
Listening to us, these are people clocking in. They're hourly. They're not in the front office. So.
Say again.
I said, no, the people listening to us, these are the people who, are the hourly workers for the most part, not the people.
Yeah. And stuff. Yeah. You're rented. You're renting insurance big time. If you're hourly, you are just hourly. Knowing that you're hourly tells me that you're renting insurance.
And that's me. I don't like to jump into something that I know I already lost. Like, it's no way. Like, I need to get into a vehicle and where I'm gonna be able to move forward, not backwards. We already been back too long. So now it's just basically implementing these strategies that's out here, that's online, that's offline, like everything. So like we have so many resources. Like we have the most powerful device, y'all. I'm gonna say it one more time. We have the most powerful device, and that's our cell phones. When our mothers, they didn't have no cell phone. What is a cell phone?
Yes, Lord, you can make money from your cell phone today.
Yeah, so we have to take advantage of that. Like today, not yesterday, but today. Like it starts today.
A cell phone, you could be a multi-millionaire. That's all you need.
Hey, talk to me, Crypto Millie. Hey, we gonna
get
some
millions. Go, Crypto Millie.
Let's go. Hey, high five. Woo, let's get it. Hey, come on.
Yes, I'm loving this energy. But listen, I mean, you talked about riders. There's all types of riders. I'm not going to go through them, but just want to highlight a couple of them that's kind of popular, like the accidental rider, right? The accident. So people think that if they get these little flyers in the mail from banks and stuff, my gosh, and they're like, oh, I got insurance. Are you kidding me? You thought that was insurance. So, and these are like accident type insurance policies, meaning that you have to die in a helicopter crash in order to get the policy money, right? You have to die in
something like Kobe Bryant or no?
Say again?
Would that be like something like Kobe Bryant since he had died in a helicopter or something like that?
And what happens is it doubles your death benefit. A lot of them you can get like up to double of whatever your death benefit was. So let's say your death benefit $200,000 policy. But if you die in a helicopter crash, that's $400,000. But you have to have that rider on there to do that. Yeah. So the rider is a benefit that's added to your policy. It's like an upsell. I don't even really talk about them with clients too much because usually whatever they're getting is a stretch already. But, just understand there's a whole lot of different types of benefits that you can add on it. You just have to ask about it probably if it's not presented to you. But you have the accidental death benefit. You have the accelerated death benefit, which is the living benefit that you often hear about with the medical. You have the term rider that you can add a little term inside of your IUL or your whole life policy to make it a little more robust, give you a bigger death benefit. It expires in 30 years, but you get to add that on. So you have a bigger death benefit up to 30 years, and then it's going to drop, if you live beyond. So you can also add that into your permanent policy as well. You have, it's a lot of them. I don't have them in front of me like the second, but just ask about whenever you're talking to a life insurance broker, ask them what riders are available on the policy that you're actually purchasing. And they can kind of run down through all of them so you can kind of see, what's there. You also have the over loan protection rider. So if you have a IUL and you getting crazy with your loans, it won't default and cause your policy to lapse. it's going to cost you. These riders are more expensive. They're going to add more premium to cost, to what it is that you're paying. But it's about you and your security and what it is that you need. So if you say, well, I know I might not have discipline later on in life, I don't want my policy lapsed, I want to get the overloan protection rider, and you can add that on there, and it'll last for about 20 years, a certain amount of years, either way.
Okay.
But it's a lot of riders that you can add on to any type of policy. Yeah.
Okay.
Good question.
Okay, well, you just stated that a person can put life insurance on their child as early as 15 days old. But why do you think those different cultures know that? But when I talk to some people of our culture who 20s, 30s, 40s, 50s, and they've never heard of IULs or whole life. Like for one instance, right? I'll make a quick example. And this is like a real story. So I was talking to a couple of guys one time at the employer, and I was like, man, talking to them about life insurance. They laughed at me because I have it somewhere else, and they laughed at me like, oh man, why'd you do that? You could just get it at work. I'm like, why would I get it at work? And so I started explaining to them, that theirs wasn't guaranteed, and if they were to leave, leave the job, that they wouldn't have it at that point anymore. So all the money they're paying is, like you said, pretty much going down the drain. So, just like, why do you think that our people don't know much about life insurance?
Just like we don't know a lot about a lot of things money wise. Right. Unfortunately, I don't know about you, but nobody taught me about money in my household. No one taught me about money in my school. I went to South Carolina State University. No pun, but nobody talked to me about it. And I was a business major. No one talked to me about it. Even when I went to get my master's degree at DeVry at Keller Graduate School of Management.
And can you say that one more time? You say even when you got your master's, they still ain't teach you about money, finances?
No. So here's the deal. I mostly learned corporate finance, not personal. Okay. And of course,
but that's two different things, correct? If I'm not mistaken.
Yeah, they're significantly different. But even then, an IUL wasn't in my textbook. Are you kidding me? So IUL's been around about a little over 20 years. They've not been around forever. They've been around over about 2 decades. So again, nobody would have been able to tell me about that even when I went back when I was in the military. That was too long ago. That was before IULs even came around. It's kind of like NFTs today. It's been around more than a year, but people just figuring it out now. All right. Same thing with crypto. People just finding out about it, even though it's been around since 2010.
Yeah,
so it's a matter of, were you under a rock or what was going on? You didn't hear it. You don't watch the news, and if you don't watch the news, if you're not in tune with the actual industry of finances, you're not going to know that. Like,
you're going to be out of sync.
Listen, let me give you one book that's going to teach you a lot about it. And that's The Power of Zero. Written by David McKnight, telling you how to get to a tax bracket of 0. See, most people look at money and don't nobody care about no taxes. They care about the mortgage. They care about the car. But guess what? Your biggest debt is your taxes every year. I went from paying taxes to getting 5 figures back in my refund because I had the right person doing my taxes. Most people want to pay this little cheap $100 for their taxes, and that's not it. You need to find somebody to know what they're doing that's going to get you the most money back, because you're spending thousands and thousands of dollars every year in taxes, especially if you don't have your W-4 structured properly to be able to not, pay so much all year long. I'd rather you pay at the end than pay all year long, okay, and get a refund back, because you can be investing all that money somewhere else all year. So that's a whole W-4 course. But either way, the taxes is your biggest debt. And you got to get a CPA or at least a tax professional that really know what they're doing. These little franchises y'all got to stop that, because you are shortchanging yourself. If I can get you to keep more money because you understand that taxes is your biggest debt, and now take the money that you kept every year, thousands of dollars, and now go invest that money into something that's going to make money for you while you sleep, you starting to win now.
Because are you a little bit familiar with it's called income shifting? Are you familiar with that?
Income shifting?
Yes, income shifting.
It sounds like what it sounds. I guess I could be familiar with it. You want to tell me what it is?
Okay, so
I'm always a student.
So basically, with income shifting and everything like that, say if you're a worker, right? And you want to be able to get back just a little bit more money and everything like that, you could be able to go to your W-2, but you have to file that out properly right. So you got to know like the numbers and everything like that. And plus, on there it also states that like if due to your circumstances, if anything changes, you can always come back and file it out. So basically, it's just an income shift to be able to bring more money back into your household instead of paying taxes and stuff like that. That's why I brought up the income shift. And hopefully I broke that down good to you.
Yeah, it sounded like what I was saying with the W-4. Are you doing something with your W-4 to make sure that you have the proper exemption so that you pay less money? Is that what you're saying? Yeah.
Yes, ma'am. Yes, ma'am.
So they have a terminology for it.
Yeah, it's called income shift. Yes, ma'am.
Got you. Very good.
Okay, and just going into this. Okay, so what kind of steps will one take to become a life insurance broker?
Good question. It's really easy, to be honest with you, but most people don't do it because our people don't want to buy it, and that's primarily who won't buy from us anyway, for the most part. So I had a different kind of clientele base from where my background, so I was able to leverage that. But the steps that you would take is really simple. It's almost, can I say, you don't have to have a degree, and you can have $1 million license.
So you tell me it's like filling out an application, like going to a job? Hold on, you said it's easy now.
The same way you get your license, right, by studying for your exam, and you go take a test. If you're a poor test taker, you're gonna have a problem with life insurance. It's a lot of it's about 121 questions depending on where you are in the United States.
How many can you miss?
Think about 121. You got to make an 80. So and it's like 2 of them, right? So one is more for the law side. You got to understand the law, the regulation. That's huge. Only 25 questions, so you don't get to miss a lot of those, right? And then you have the other one that's like 120. It's like it's 2 parts to your exam. But basically, what you're going to do is you're going to go and study for that, like you would your any type of degree that you would have. You have to go 4 years, 3 years, whatever it is that any kind of trade that you take. You got these, what they call them, Job Corps. You got these little trades.
Yeah, Job Corps. That's crazy.
Yes, I mean, so listen, it's really simple. It's really similar to that. If you're somebody that can read, it's really boring in particular. If you got a little bit of ADD in you, like me, you're gonna be like, man, this is boring, and you're just gonna have to stick it out. You're gonna have to open your eyes, stretch your eye, get some eye stretchers and read, and just go for it because it's real boring material, dry material. But some of it was really interesting, and that made me feel like, wow, I'm really doing the right thing here, because it was so much that I did not know, like money laundering, and people money launder a lot through insurance policies, and so that's why we have to do an anti-money laundering. But either way, it's a lot to learn about just how to do money the right way, even in getting your insurance license. But to answer your question, you can go to a place like adbanker.com. That's who we normally use for people that we bring on board in our company. Literally, you could pay $100, and join my team. Literally, $100, join my team. Go get your license. People get their license as early as 1 week, as long as however long it's going to take you, several months. But you're just going to go and study. adbanker.com gives you a guaranteed pass as long as you read the material and you make an 80 on their practice test. You can take that practice test as much as you want. As long as you make that 80, 72 hours before you go take your exam, you will get your money back if you fail your exam. But
you got to continue to pay that back, right? That $100 if you don't pass.
That $100 had nothing to do with your guaranteed money. Like, so what they're saying is that when you go to the state to pay for your exam at the state level, that exam money might be like $120. If you fail, they're going to reimburse you the $120 that you paid to the state.
Okay.
Because they guaranteed you that if within 72 hours you take their test and you score an 80, you should be able to pass that exam at the state level. So they have a guarantee. And so that's what's wonderful about them. And that's why we have a partnership with them. So even if you decide you want to do your own thing, go to A as in apple, D as in dog, adbanker.com, and they have a guaranteed study course. You're going to pay about, depending on how you want yours done, about $190 or $180. But us, you don't pay anything, because the only thing you're going to pay us is the $100. And now you have access to our, what I like to call PhD level of financial information. even if you never get your exam.
Right.
If you never become a life insurance broker. I got people on my team they try to think about knowing life insurance, but they just want to know the information. And you have access to that in our platform by only paying $100. And we give you access to 80 banker to go take your test. Where they do that at? So most places you're gonna pay like $2 something to join. And think about it, $100 for a franchise fee. You ever heard of paying $100 for a franchise fee to get $1 million license? So that's to put it in perspective, because we give you the recipe on how to do this business. We teach you how to be an entrepreneur on our curriculum. You get access to an entire curriculum, how to be an entrepreneur, how to work with carriers, what to do as a marketer, how to market, all these different things. We teach you all of that from A to Z so that you're a successful life insurance broker for $100.
That's a whole lot of volume if you ask me.
So come Monday morning, I call you, hey Shateka, I want to give you this $100 to become a life insurance broker. I can get the ball rolling.
Yep, you just get the ball rolling. I send you my link, you sign up, you do your thing. I'm not gonna chase you though. Listen, I don't have time to chase nobody for after their own dream. I'm not gonna do it. Listen, I did that when I was in corporate. I'm not doing it no more. I'm in my prime right now. I'm just gonna make my $1 million this year, and if you want to make negative whatever, then that's on you. I'm going to show you how it's done, and that's it. Like, I'm gonna teach you like what you want to learn, but listen, I'm not going to be running people down to go and do their business. That's not what Shateka going to do. Not in 2022. This is my year of peace and power, and that's what I'm going to walk in. Okay.
Hey, Queen, talk heavy, Queen. We like that talk over here because you empower other people. So that I know they feel that energy.
You got to have your own inner motivation and inspiration, okay?
Hey, come on, man. We got to inspire out here. That's what we doing. That's what we going to continue to do. They got I know they
listen, I'm not trying to carry no weight. I'm not carrying no weight. Y'all gonna about to see, I'm about to put a post out there about how you going to shine when you get rid of all the dead weight. And that's talking about people. That's talking about anything that's keeping you back, any situation. It's time to start shedding that stuff. And start literally beginning to move in the trajectory of where you're supposed to be. And so there's a lot of hindrances that people go through in their life between their family hating on them, their spouse hating on them, their children, their parents, all this crazy stuff that people go through and that I've gone through. So I understand. Listen, lay it all aside and move forward and what it is and who it is that you know that you're supposed to be. And so part of what I do is I help people move from career to calling. Okay, so let me tell you what it is. We help people retire before they expire by making sure that you put your money in the right vehicles, positioning your money properly so that you can make money for you no matter how small it is. Okay, we're gonna help you retire before you expire. So if that's you and you're looking for that, we're the ones you hire. Our goal is to get your bank account on fire with a whole lot of lifetime tax-free retirement income that you will not outlive, because the greatest fear besides dying is running out of money, because too many people run out and got to go back to work in their 70s.
And that's something me and him talk about all the time, because
that's crazy.
Everybody,
I'm gonna keep you from going back to your job if you can just work with me though at a young age.
Because everybody talks about the 401k, especially
the herds, the people that follow everybody else.
The first thing that when you go to a job orientation, the 401k. But me and him, we do our research and we both know that most people who retire with a 401k, they don't have enough money in their 401k to retire, early.
401ks is talked about in the Department of Labor handbook, all the fees. When you go to anything, stocks, all those different things, when you go to a financial advisor, I'm not a financial advisor, I'm a financial planner first, right? So financial planner is going to give you a comprehensive look at what you have going on and help you make an informed decision. A financial advisor is supposed to help you grow your money. When everything happened with COVID, a lot of them couldn't be found. It was hiding somewhere. So the fees and the taxes is what eats away at a 401k. Those two things. I can show you with my software how you're going to run out of your money in your early 70s using your 401k on average. And how if you put your money in a tax-free retirement account, you're going to not only have your money, but you're going to have a death benefit for legacy kings. And you're going to have medical if you need your medical. And your money is not going to be able to be taken from you if you have a lawsuit of any kind. Divorce, creditors, and you won't lose a penny in it if something happened with the market volatility. How you like that? That's called a safe haven for your money that the rich and the wealthy know very well that we don't know.
Yeah.
Ooh, hey, in your face.
Yeah, that's something that we've talked about on here as well, because, just like I said, just by doing the research and reading, different books and things of that nature, we found out that the guy who bought McDonald's from the McDonald brothers, he bought it through a life insurance. Walt Disney, he had life insurance.
That's right. Walt Disney, you wouldn't have known about it because he funded his employees. He was able to keep them because he went to his policy. All of them did. J.C. Penney, Sam Walton, they all have policies. Every billionaire, listen, you need to follow what the billionaires are doing. Billionaires said, do it, okay? If they say you're not supposed to, work all the days of your life, you got to figure a way for your money to make money for you while you sleep, then you need to go and figure a way to make money while you're sleeping. And if an index universal life is going to perform for you without you having to worry about a whole business, and you're going to get your money tax-free growth, I mean, where else do you get tax-free growth? Nowhere.
Come on.
Unless you have a Roth somewhere, and you're very limited in what you can put in a Roth. But if you have a great death benefit, now you can start to hire more money. The higher your death benefit, the more money you can put in it at a higher MEC limit, right? That's how that works. So that's why these business owners primarily use an IUL, because they got a lot of money and they got to put it somewhere where they can have a big death benefit. They name themselves as an executive bonus. That's how they do it. So they form their companies into a C corp tax, from a tax code perspective, right? Did you all know that everything that starts with a 4 is a tax code? I didn't mention that earlier. Everything that starts with a 4, 401, 403B, 457, 414, they all are tax codes. And that means you're going to pay taxes on everything. The wealthy do not put their money in anything that starts with a 4. And anybody that follows me knows that. I always say that. They don't put their money in anything that starts with a 4 because they know they're going to pay taxes. They put their money in things like an IUL, okay, because they want tax-free growth on their money. They know they're going to have to pay capital gains on stocks, real estate, crypto, all of that they're going to pay taxes on.
Okay, I want to say this about taxes, right? That sound like kind of crazy, right? How can you tax unseen gains in crypto?
Oh, they know. Let me tell you.
But you see how they plan it.
They know.
Come on,
so here's the deal: they got a Cash App, you got a Coinbase. They reporting to the IRS.
Yeah, the ACH, but it's certain. But I want to let people know that there are certain ones that's out there that you could be able to use to be able to I don't want to say like hire money from the ACH, but it doesn't show the ACH transaction. So it's certain ones that's out here that does it, like for example, like KuCoin. So you could use KuCoin and put your money over there, but they don't use
over here. Spell it, please, sir.
KUCOIN. They don't use the ACH for the bank's transactions and things of that nature. So that's one of them that you don't have to worry about or anything like that as far as like with the crypto side. But like you said, when you go to Coinbase and Binance USA and things of that nature, they're using that ACH, and plus they got all your information. So you're gonna be taxed on that. So we just gonna let y'all know, like, yeah.
Cash App sent me a 1099 in 2020. Are you kidding me? What are you sending me a 1099 for?
And then like on certain ones, cause I want people to know too, on certain ones when it's coming down to this crypto space, and like on certain apps like Coinbase and things of that nature. Like if you it's like $600, if I'm not mistaken, like $600 or more, then they send you like you said the 1099 or anything like that. So they send you the forms where you could be so basically you get taxed on it. So yeah.
Absolutely. This has been fun. I'm excited. You guys are on it.
I got one last question before
your last question. I feel like I needed to say more, but we went a little bit. I went into a little rabbit trail a little bit.
No, just my last question. I'm not cutting you off. I'm not cutting you off or nothing. I'm just, what I'm saying, I want to ask my question before we move on. So
no. What was your last question? Because I feel like I missed something and I didn't get to see it.
Okay. No, I was just talking about the life insurance broker. You answered that one pretty good. But this question is, do you think, okay, because we're not going to go conspiracy theory here, but the U.S. dollar, as we know, is going down. China's going to, leading towards being a number one country, and so on and so forth. So my question is, okay, with the U.S. dollar going down, will life insurance companies ever tap in with crypto, you think, in the future? Like
Absolutely. Absolutely, I think they will. Absolutely think they will. Yes. In fact, everybody's in crypto. They're not going to say it publicly a lot, but you got banks that's already in crypto, right? Did you know that?
Yeah, I know Jamie Dimon was talking about it with Chase.
PayPal, the list goes on. It's Bank of America. They all in crypto. Mm-hmm. So yes, and the
NBA, like it's no way. Look, see, me and SSJ go back and forth for everything because I love crypto so much. Due to the circumstances of, you really can become your own bank. All you need is just your cell phone. You need to write down your private key and have your 2FA Google Authenticator. Make sure y'all have that, y'all. And once y'all have that put in place, it's over with. So you don't have to no longer worry about the middleman and you getting predatory fees and things of that nature when it come down to these banks, and they just continue to rape you from front to back. It's just ridiculous. Like, they have so many products that they gonna tap into that they could be able to sell you. So that's what it's about, having how many products can you have to sell to these customers or these clients, point blank period. You know what I'm saying? So yeah, like it's crazy, but I'm just happy that, like, so far up to this point, that I've been basically enlightened with this information and everything, and I've been changing my life. So I know with the information that we giving out to the people, I'm literally like, I'm a living proof, like SSJ living proof, like we're changing our life, and we're still fairly like young. Like, people still be like, oh, are you a kid? Like, I'm 29. We talk about kid. I'm a young guy. I don't know about no kid, but yeah, like, they just, you know what I'm saying? Like I just take the youth on our side and I just run with it. And so I know it's some people that's out there that's listening to us right now that has that view, but just don't go blow it every weekend. Oh, that's all to say. Don't go blow it every weekend. Like, invest that time, like pick up a book, like take courses. Like, it's just certain things that you could be able to do right now as we speak, that you could be able to take it to the whole next, you can take it to the next level, like ASAP, like today, especially off the information that you was able to receive from Shateka today. Like, come on, man, she dropped fire, she dropped bars on y'all, like, literally. So yeah, I just wanted to say that.
Yes, that's awesome, man. Look, we could talk about money all night, to be honest, but what other questions you have over there, SSJ?
I mean, that was like my crypto question. Oh, another thing, because I have a daughter, so my daughter is, obviously, Black. So I know that, how do I word it? Normally, historically, I guess you could say, maybe historically, life insurance has been ran by, men and of, a different culture. So as a Black woman, to get to where you are now, like, what obstacles did you have to, push through in order to get to where you are?
That's a great question, because, excuse me, there's redlining that goes on in this industry. And the way they got things set up now, they're not even looking at credit to try to, not have to lower, or I should say, to increase your premiums. Okay. If you have bad credit, you're gonna pay higher premium. If you have a record, you're gonna possibly, not have insurance, because they know that that's a way for you to build wealth. I mean, it's weird. It's weird. I've never seen the amount of racism I feel until I came into this industry, and it's disheartening. And I'm out here fighting. Like, I fight. Like today, I sent an email. It's crazy. Like, I have somebody 52 days. Why are we waiting 52 days for something to sit in underwriting? Why are we doing this? So for me, it's making my job easier. I mean, harder, right? It's causing me disruption with my clients, because it's not me, it's the insurance. But it's because of who I am. I got to go through this, right? I'm African-American female, I'm not saying everything is racist, because I'm not one of those people by no means. I've done very well in my life with a lot of Caucasians, and I got a lot of Caucasian people, in my circle. But I do know when I am being discriminated or when my clients are being discriminated, when you downgrade a policy all the way to denied, when they didn't really have anything going on. Are you kidding me? You denied them. So now they can't get policies from anywhere. Because what happens in the insurance industry is once you get denied one place, it's hard to get other places. So I often tell people, get a risk assessment before you apply. Especially if you have something health-wise going on, get a risk assessment. They can tell you whether it's going to be denied or not primarily before you even do that. So yes, I feel like there's some redlining going on by individuals that happen to be racist within the industry. I'm not saying that, by no means any particular company is racist, but I'm saying certain individuals in there, because they make it really hard. They send it back for some stupid stuff a lot of times. And I just frustrate because it creates more work for me and it creates more time. Listen, I'm like, wow, my God, I hope the person don't die by the time we get this doggone policy done. You know what I mean? That'd be my thought process because it takes so long. It shouldn't take that long. Some policies can
that's a long time.
3 days and boom, we got it. Other policies,
it should never take no 50 days. I don't think, I could be wrong, but 50 days, that sounds like kind of, that sounds kind of
listen,
crazy.
I put them on blast today. I got tired of it because here I am calling all the way up to the manager level because that's what I deal with. I don't need to deal with it. And they didn't even return my call, so I'm hot about that. You mean you a manager and you're not returning my call? That's what we do? Because I know what it's like to be in management position at high level, leader. I did that. I had to call my customers and clients back. You gonna call me back. So no, what I'm going to do, we're gonna go to Better Business Bureau. We're gonna go where we have to go to, but we're going to acknowledge me and take care of those clients where I'm at. I just actually, I'm a broker, but they give you all these rewards and everything. So they just gave me another promotion. I'm ranked #1 in the company on things, but that wasn't easy. This past year was hard. So people like Shateka, I don't want to tell them, listen, you just gonna have to fight through whatever you have to fight through because there's other African Americans, out here, but they're not #1 inside the company. First Financial Security.
I just want to say congratulations too.
Yeah, thank you. I'm powered, Shateka Husser Financial Financial Services, or Husser Financial Solutions, DBA. We are powered by First Financial Solutions. First Financial Security, excuse me. First Financial Security. And yes, they just recognized me this past weekend when I was in Virginia. 50,000 points, actually about 54,000 points. So the highest year to date. But it's because we have some patient clients, all right? Because some of them have to wait longer than they should have to wait, and that really does frustrate me. So you kind of open up a can of worms by asking that question. How has it been? My clients I felt like been discriminated against, and I have called it out on emails a few times. I said, this is redlining, even down to, COVID. Now, you dig a little bit and you find out it's not really redlining, it's their policy. But I do know that in any position, some rules cannot be followed, right? Okay, if somebody's going to travel outside of the country, you don't tell them they have to go get a shot because that's what they're doing now. You got to have a shot, or you can't.
Yeah, they forcing people, even to switch states too. Like they're forcing you to have this.
Like if you're trying to get a policy, you have to show the vaccine card. You know what I mean? And everybody don't want that shot. So I had a client. I said, you about to get a felony. You can't do that. I don't know about to be a part of that. So you got to make sure that come out here and you got to have a vaccine card. If you're going to go and travel 2 years from now, all this kind of stuff. That means if you don't have it, you can't get a policy. And only certain races.
When do that start, or has it already started?
It's already started.
Okay.
They have on certain carriers that actually these questions like, are you going to travel abroad in the next 2 years? Travel. And if you're going to travel for the next 2 years, they want you to provide a vaccine card. If you don't provide a vaccine card, they're going to deny you insurance.
It's crazy because me and him, we discussed that one day because we were talking about. I was telling him I wouldn't be surprised if in the future. I mean, I don't know if they will be able to do this or not, but this is just a thought that came into my head. I wonder if they will try to fight paying out a death benefit if somebody was to die of COVID.
Well, listen, You mean if they did not get the vaccine and they died from COVID per se?
Right. And then when
you know, a lot of things is COVID even when it's not COVID.
Right.
Like I have valid sources that's telling me that it don't matter where you die from, especially if it's a malfunction or what do you call malpractice? Excuse me. Right. A malpractice is now a COVID. They did something wrong in your surgery. Now it's COVID. It's hard. I done listened to heard a lot of stuff about COVID. That's not COVID. We know that COVID is overrated. The numbers has got to be there because they make the money from having these cases of COVID. That's a money thing also. But I hear what you're saying. It's a sad situation.
Yeah. I don't want to go too deep, but that was just a thought that popped into my head. You know what I mean?
Yeah. Like, I'm trying to go deep. You know, we can stay surface.
Yeah.
But listen, I mean, really, like people that don't take the COVID shot, I feel like, you know, in court of law or anything like that, listen, that's their decision, right? That's a decision if they want to take the COVID shot or not. At the end of the day, their health is their health, and COVID is something.
Health is your wealth.
Yeah, I mean, their health is their wealth. I mean, listen, everybody that get COVID, or even have to take the shot, people that take the shot, they still die. Some of them still get COVID. I mean,
they still get sick. That's a whole nother different strain.
And everybody talk about, well, you had all these other shots, but how long has this been around? Yeah, we can put it on, but that's another whole topic. It really is. Yeah. But thank you guys. This has been some great conversation. But I do feel like, you know, there is some redlining in the insurance industry, and I often try to get more, minorities to join the organization for that reason, to help me fight in the journey. But people don't like it because it's not a sexy position. I didn't necessarily. Let me tell you how can I tell my 2 minutes or 4 minutes story of how I came about this?
Go ahead. Hey, the floor is yours, Queen.
I wasn't, listen, when I was a little girl, I was like, oh, I want to grow up and be an insurance broker. That was not it. Okay. But what had happened was, if you go to generationalwealthsymposium.com, you're going to see where I did a major event in Baltimore at Morgan State University, and I had about 225 people that showed up out of 475 people that registered in the cold in November, the day after Thanksgiving, that Saturday after Thanksgiving. So it was a great and it's a well-attended event. But what had happened was the keynote speaker that I had to speak at that event told me, Shateka, you need to get paid, because I didn't charge anything. It was a free event. I was just trying to look out for the cookout, trying to make sure my people get the education. I wasn't trying to make the money from it. But she was like, you need to go ahead and get your license, and I can pay you something, but I can't, because she said, we're going to make money off of this. Listen, but I can't pay you nothing if you don't get your license. I'm like, well, I'll be doggone. I'll be doggone. These people are coming here for free, and maybe I should for my time and effort. So I went and got my license for that reason at that time. But in getting my license, I learned that was one of the best decisions that I made, because like I said, I learned so much from it. Some of it was dull and boring, but other parts of it was like very interesting about how things flow with legacy building, to your point. If you want to learn legacy building, you need to get your license. It's going to teach you a lot about legacy building. So, and my whole mindset was about generational wealth. I had the Winning in Wealth show on Baltimore radio for like 9 months. I mean, I'm always about trying to educate the community, even at my own expense, because nobody was funding that. I had to fund that, right? But at the end of the day, it's now all, paying off, because I didn't know how much insurance brokers made. I'm just going to be transparent. Yeah. Oh my gosh. Listen, I am making now I'm almost making now what I made when I was in corporate. My prayer is to go ahead and make these 6-figure months, right? Like January might be my first 6-figure month, possibly.
You're gonna get it.
So it's a big difference. I used to have 6-figure years in my 30s, but now, so it's a big difference in what I'm making. But I didn't come in this for the money. I just came in here to help. I just wanted to help people, but I wanted to get my license so that she could pay me something for my time. Because you know what it is like to put on a big event. It was 11 speakers. If you go to generationalwealthsymposium.com, you will see the level of event it was. Huge. Okay. But it was a free event. So at the end of the day, I was just wanting to get something for my time back. But I wasn't going to really like work it per se, unless she was going to feed me, like source me with clients. And she said, I can guarantee you X amount of money per month. And none of that happened in 2020. And in fact, that was my worst year ever financially, 2020. So at the end of the day, you can make a lot of money helping a lot of people to make the better decision about their money, and educate people. I get my greatest satisfaction that people actually buy a policy because I believe in it so much. I have 3 policies personally. I have a whole life, I have an index universal life, I have a term. They all serve different purposes. See, your policies serve a purpose. Whole life is it can be used as a bank, but it can be used for, like I said, guarantee. Okay, guaranteed death benefit, but then you can have a index universal life for your retirement account and for more growth because it's a cash accumulating cow, right? So you have them for different reasons. And I even spoke to a couple today, they want both reasons, right? But they just want to use the IUL. Of another person, they don't care, they just want to use the IUL. Most people don't want to do the whole life after you explain it. They just want to do the IUL. I don't feel bad about that. Some people are adverse they feel adverse to the IUL because people have lost their policies by having an IUL. But that's because they were not explained and it wasn't properly structured. You have to properly structure an IUL or it could be detrimental to the client, okay? Because you can have an A level or a B increase, and B increasing meaning it's going to start off really, really small, going to blow all the way up as the years come up, and then it's going to come all the way back down, okay, in their late years. So a B increasing is not for everybody. You want to be able to turn it off of B increasing back to an A level at a certain age. It's just about managing it. And so most people, you don't really hear a whole lot of brokers, especially not us, talk about IUL, even though you are broker. Most of them just do whole life. They just do whole life because it's easier. They understand it. They don't have to structure it. They don't have to take on, how to figure it out. IUL is a lot more sophisticated type product. You gotta really get in there and learn how to properly structure it and teach the people how to properly fund it. Because if they don't, or they take out too much money, again, they can lapse the policy. So it's a little tricky if you let it be, if you don't know what you don't know, right? If you don't know what you don't know, you can lapse the policy. Yeah. So it's an educational gap when it comes to even the life insurance brokers that are out here. Most of them will talk about a whole life because everybody knows a whole life. It's been around forever. So most people know it. They know how to structure it. IUL is a little newer product, more sophisticated. They don't really understand it. They don't really know how to structure it. And they're not going to talk about it. They're going to stay away from it. But the lady who brought me into this industry, this keynote speaker that I'm talking about, her name is Shirley Liu, L-U-U. And she wrote a book called IUL ASAP. If you want to go to Amazon, it'll teach you all about IULs. It's a really phenomenal book. I'm about to steal some stuff out of it and make my own book. It's so good. Dave, Susie Orman and Dave Ramsey, I don't have nothing on her when it comes to how to get that money, how to get that bag. This lady will teach you how to maneuver around any situation for any client to make it work. And so she's taught me, and that's how I became the number one, because I learned from her. I was a sponge, and I don't care if people know who I am. It's a 7 billion people world. I don't care. Like I don't have a scarcity mentality. You can go work directly with her, or you can work with me. It doesn't matter. And at the end of the day, we all need to be out here winning, because that's what it's about. If you're not winning, you sinning. And as African Americans, our people, it's time for us to go after what is ours. We may never get a reparation, but we need to get our own reparation.
Hey, we got that right now with crypto. That's where our reparations come in at with crypto. You just gotta be able to dissect and know which patterns is what, because if you look at the charts and if you look at the percentages and things of that nature, crypto is leading the pack. So like, even though you may not understand it, all you gotta do is just keep let's kiss the subject. Let's keep it super simple, y'all. Yeah. Just go to Coinbase, download Coinbase, just start buying Bitcoin, Ethereum. And no, I'm not a financial advisor or fiduciary, y'all. I'm just letting y'all know what I've been picked up on from my knowledge and from other people, from courses and me reading books and stuff like that. Like just get the basics, get the Bitcoin, get the Ethereum, and then you hear a lot about the metaverse. Like you can either get mana, or you can either get sand. Like it's just like that's 4 of them right there I just named. Like, and, like I don't want to get too technical with it, but yeah, like just keep it basic. Just go to Coinbase and get them coins, y'all, and you will see. And right now you would be able to get into a great price point too, even though the predictions is going to 30,000 SSJ. Don't tell me 30,000. 30,000, bro.
Yeah, I'm looking at 30, man. I told you
30. You talking about the Bitcoin is dropping to 30?
Yeah, Bitcoin is the indicator.
Oh, yeah.
Yeah, the indicator is showing that it's dropping to 30. Yeah.
I told him this when it was in the 40s though. I'm like, dude, I'm looking at the support level.
Yeah, I was looking at it dropping a while back to 46, and I stopped looking at it after that.
Yeah, I'm like, yeah. I think it's going to 30, man.
Yeah, no matter what, I'm not taking my money out to a listen. It get back up there.
Yeah.
And I'm not about to have a negative. So
because
it's gonna sit right there and be parked until it bounce right on back up. If it take a year, take a year.
Mm-hmm. Because think about it like this, right, y'all? Go to coinmarketcap.com, y'all. Coinmarketcap.com.
Yes.
Yeah, I love that site. It gives you everything. But coinmarketcap.com, y'all. It'll give y'all the 24 hours, the 7 days, and within the 7 days, or you all you gotta do is just basically take it from this 52-week high, which is the 69,000. So you take it from 69,000 to where it's at right now. That's so you're basically getting more than 30% on your money guaranteed already, just because where the price at right now. So you gonna get that, and plus when the bull come back around, hey, hold on, hey, it's gonna go. It's go. You
I'm
better
gonna go to KuCoin. I'm gonna go to KuCoin and get mine. How about that?
Yeah, it's just different strategies for different people, but it's just like what you want to do. You want to go to KuCoin, you want to go to Coinbase, you want to go to eToro. Like it's different ones that's out there, y'all. So just do y'all due diligence, because what I'm telling y'all, hey, just go back, do y'all due diligence, because I don't want anything coming back on me saying, oh man, Orlando.
Go due diligence, yes. Because I was gonna name a fund that people are putting their money in, they get 0.005% on whatever it is every single day.
And I also want, because I was talking to SSJ earlier today about buying crypto.com. And the reason why I say buy crypto.com is the Philadelphia 76ers is it's on their logo, they patch is on their jersey right now. They just bought out the Staples Center. So ever since I grew up, I know Kobe. You know what I'm saying? Kobe getting buckets. But now it's crypto.com. So now you could be able to get that coin for 39 cents right now. That's way like 39 cents, right? Now take that 39 cents, right, y'all? Now you could be able to stake that between 10 to 12% and just let it ride on out, because you know it's going to be here. Their branding is crazy right now. Plus, they got the partnership with the NBA and everything like that going on right now. And Sacramento Kings back in 2014 was accepting cryptocurrency, just like the latest news with Mark Cuban when he started to accept Dogecoin and stuff like that at the Mavericks game. So it's just it's out here, y'all. Like the information is here. We just one of the outlets here. You have other outlets, but just tap in, just listen to what we got to say, y'all. Like we changing our lives, and we want to change your life as well too. And that's what Legacy Kings is about. And we all come together as a big community. It's about unity, y'all. It's about unity.
Yeah.
That's right.
I don't really have much to say. I think we covered a lot tonight, man. I think it's a lot of gems that were given out tonight that, if people didn't know, they definitely should know now. Or if they still need to know more, your information is right there actually on the Zoom, your email and, her phone number. So
that's the wrong number. I looked at that tonight. I'm like, that's the wrong number. Okay, so if you need to contact me, 678-736-6496. It's 678-736-6496, or go to Shateka.com. Not Shateka Husser. That one's a lot going on too. But Shateka.com will give you what I need you to be at, where I need you to be at. Text, the word, what's this show? Legacy. Text Legacy to 678-736-6496. So I know that you came on this show and everything, so I can make sure we take good care of you if you decide to do any business with us. But our goal really is just to educate. They'd rather you never do business with us. Hopefully you got something out of what we said tonight, because again, I wish I would have known what I know 20 years ago, but it is what it is. You live and you learn, and so then you give back. You go back and you teach other people, and that's really what it's all about. If I can get more shows like this with the young people, that'd be awesome. Just to be able to. I know people say the young people. I know some people think I'm in my 30s, but yeah. But either way,
I got
a youthful spirit though, and I used to always tease and say I'm 21 and holding. But those days getting going, okay. All right. But so yeah, we really want to make sure that we are, having these conversations as much as possible. Would love to see y'all on some radio shows too, in some big cities, So if y'all might want to start looking at some sponsors and just getting on the radio and let them hear you. You guys got a lot of good information to talk about. I don't know what kind of platform you guys have also for training. I'm in partnership with a academy. A lot of people have heard of this academy, but they do a lot of training around crypto as well. And I just think that the guys that are on it are teaching the crypto space. They don't like for real. Like they gonna get you the bag, Polkadot, and all the other stuff that they be talking about. But
yeah, VeChain.
Yeah,
like,
it's a lot of them out there that's doing very well. I love the crypto, but you gotta have some thick skin. Like you can't be somebody that's watching the market every hour and every day. Listen, that's not gonna work for you because it's a volatile market. You gotta have to set it and forget it. Only invest what you can afford to lose. I say that again. Only invest what you can afford to lose. But you expect the best, you know what I mean? But you plan for the worst. So when it comes to crypto, it's volatile, but it can make you a whole lot of money. I'm with you, Crypto Millie. It's a lot of people.
Hey, come on, talk to me, Queen. Come on, hey. We are in promising times right now as we speak, y'all. Like I know we was talking about annuities, life insurance, now cryptocurrency. Like we just giving y'all that outlet so y'all can just be able to plug in, y'all. Because this is the matrix. You gotta be able to unplug yourself to be able to plug yourself right back into this matrix. You dig what I'm saying? Hopefully that makes sense. Because the thing about it is this right here. Because like Shateka said, what you don't know, like it's gonna hurt you in the long run. So with us being here right now, giving y'all this free game and we giving y'all gems and golden nuggets, like, hey, just take it and run with it. Because like I wish I would have knew this when I was younger, and I'm 29 right now. So it's like I've been on this been on this journey, I've been on this path, but it's like, oh my God, like I need it now type. You know what I'm saying? Like, you know how you just be on your grind all day, every day. Like I've been on this grind for quite some time. Like earlier, like in the show, like we've been like earlier in episodes, like we've been saying like we spent a lot of money with courses, books, just educating ourselves, y'all. Like for a prime example, like I had bought Derek Grace games called In-Home Banking, y'all. Y'all could go and support Derek Grace. It's called In-Home Banking. There's so much information in that board game. We're talking about board game because you got to meet the people where they at first and foremost. So with the board game and everything like that, it goes and it shows you the importance of financial literacy, and it simplex everything all down, like from gold volume to literally having a paid lawyer, like literally everything, just everything that you're gonna hear about just the financial sector in general is going to be in there. So I just wanted to shout out Derek Grace because he has helped me on my path and on my journey. And yeah, like I'm pleased and I'm happy. But like I said, we're still growing, still continue to build, and that's the importance of what we're doing over here at Legacy Kings. And we just want to make sure that we just give y'all great valuable information, because the value that Shateka brought to the table today, hey, y'all better stop it, man. Like, stop it. I was even learning over here. I'm over here thinking like, oh, man, she ain't gonna hit me with dude. She ain't gonna. Hey, man, look, I was over here taking notes. Do you hear me? So I hope y'all was taking notes as well too. But it just goes to show you, like, you don't know everything, and don't go into and fall into be a victim and saying that I know everything. Because one or two things to a people. One is always saying that they know something, and then two is that person that's open-minded and willing to listen to what you have to say. So for the ones that's out there that's listening and tuning in to Legacy Kings right now, I just want to say thank you. Before we go off air, Shateka, I just want to say thank you. You enlightening me even more on this show today, right now. I am gonna take the gems that you gave to us in this show right now. So I just want to say thank you for even coming on here, giving us your time, your energy. So hey, blessings, Queen.
Blessings, Kings. This is awesome. Thank you for having me.
Yeah,
thank you.
Thank you for giving us the time and opportunity. And also, I wanted to show the people. That's what I went and grabbed. So I remember I think my very first time I talked to you on the phone, you told me about this book.
Listen, that's what mentees supposed to do.
So I bought this book. As soon as I haven't read it, I'm not gonna watch it. I've been reading What Would the Rockefellers Do right now. So once I get in, I'm gonna tap in with this. But I just wanted to show the people what it looked like. So you can get those. I ordered mine on Amazon. You can get yours on Amazon as well.
Listen, I do everything Audible, but I got it. Yeah, Audible all day. Who's got time to pick up a book? Not me. I gotta cook. But yeah, I listen to it all day. I listen to your point, the Rockefellers, all of that. I have those on Audible. So when you don't have time, guys and gals, this one invest $15 a month and get your Audible account, and shoot, them books come around fast too. Even listening to them come too fast. Listen, 8 hours for a book, but you guys keep reading, keep doing what it is that you're doing. You guys are definitely absorbing the information. You're sharing a lot of good information. I took notes over here too. KuCoin. I'm gonna get me a account. I'm about to get one too. But yeah, I love it. So guys, let's do it again one day soon.
Yes, indeed.
I'm gonna keep learning too, and we gonna come back and see how much we both learn and compare notes.
Hey, come on with it. Hey, that's what it's about. Hey, this is a community over here that we building. So
I got to follow you on Instagram, Crypto Millie on Instagram.
Yeah, Crypto. It's funny that you just said that, right? Because as soon as we was gonna get done with the show today, I was gonna go and follow you, and you know what I'm saying. So yeah, that's crazy. But yeah, I do like you. I love your energy, and I just love what you brought to the table, not only for us, but for our audience and for the people that are in tune and listening to what we have to bring to the table. So like I said, once again, hey, I just want to say thank you for everything that you brought to the table today, because you brought a lot of volume, and that's what it's about. And it's volume and giving volume as well too. So yeah, hopefully we brought some volume to the table as well too for you, as well as you did for us. Yes. So sure.
Listen, I need to be around your age so I can know what it is that you guys are into, so I can know how to position for you all, so that I can be a help to you. So I see cryptocurrency is certainly one that you are interested in. So the advice that I would say is, get you a policy, let it grow, and take that cash value that's growing tax-free and go and put that inside the cryptocurrency. That's what they're doing. They're taking
it's a strategy, yes.
They're taking a tax-free income and they're going to put that inside things like a crypto. Now, again, as much as you can afford to lose, but you always want to invest what you already grew. Reinvest that money again and again. Different ways. Now you got a diversified portfolio. You see what I'm saying?
Yes. And I also want to say one last thing too. I know I'm talking, like you said, I like to talk too now. We both like to talk, you know what I'm saying? So like, I will say this though, and I'm just being real when I say this to the listeners that's out there. I know it's easier said than done when a lot of people say, "Oh, just use the capital, the reserves that you have, and go invest in this and that." Hey, look, listen and hear me clearly, y'all. If you do not have any type of capital or reserves put to the side, you better pick up your phone, go download Uber, go download Instacart, go download Uber, like literally go download Spark, like go download these apps where you can make between $200 to $500 a day. That's still outpacing and beating a job, y'all. Like we're talking like you can make 1,000 underneath 30 hours. Spell it out
for them, Crypto. Spell it out for them so they can make sure to get it.
For which one?
All three. You said Uber?
Oh yeah. Like download Instacart, download Spark, and what's the other one? As Uber or Uber. But
are you saying UBER Uber?
Yeah, UBER Uber, like Uber Eats too. But yeah, like you can literally make between $200 to $500 a day if you do not have any type of capital reserves. That's a lot. Let's just face it. A lot of people don't even have $500 in their bank account. So therefore, if you don't want to just leave a job where you make it $15 an hour, $20 an hour, trust me, y'all, you would be making like 40 an hour, like 50 an hour from doing this. All you have to do is just take the capital that you're making. Obviously pay your bills and stuff, but my bills is the investment bill first, then double back to go pay the bills. That's how I look at it. So like my first thing is paying my real true bills first, then double back and obviously paying what the society would call it as far as paying your rent and your bills and stuff. But yeah, I just want to give that to y'all though.
Okay. I love the strategy. That's a good strategy.
And one last time, you want to get
first.
Tell the people where they can reach you at on socials, like you said, your website, your number one last time, so that
Okay, sure. So I make it real easy for the listeners. Shateka.com. ShatekaShateka.com. Everything that you need to know, how to reach me, to get your complimentary consultation while it's lasting. That's how you reach me, because after 2022, I may not be around. So yes.
All right.
The power of the shift is here, y'all.
Listen, I'm shifting to B2B. I'm doing B2C, but I might be shifting to B2B here soon. I'll have courses to still educate people, though.
All right. No, go ahead, Orlando.
Yeah, I just want to say y'all can follow me on IG at crypto_Millie MILLI 21, and I talk about a lot of cryptocurrency. Y'all can go follow SSJ, but yeah, y'all can definitely follow me at crypto_Millie 21. If y'all like what y'all heard today, just keep continuing to come back, support us. Yeah, SSJ, I'll let you have it.
Yeah, and you can follow me on Instagram at the.ssj_. I post a lot of stock stuff on there. You want the crypto, you gotta go to Orlando to talk about the crypto. But
you post good stuff, SSJ.
Yeah, I like the stocks more than the crypto. But yeah, you can follow me, like I said, on Instagram. We also have the website as well, www.legacykings.net, where you can buy flashcards, talking about real estate. We had, the flashcards made for real estate by an actual realtor. So we have those. We have stocks.
Okay. You have flashcards, huh?
Crypto. Yeah.
LegacyKings.com.
Yeah. LegacyKings.net. Yeah, and then we have the merch as well. Yep, and we have the merch, hoodies, shirts. So yeah, and if you would like to continue to listen to the podcast, you can find us on Apple, Spotify, and this is actually going to be our second video for YouTube as well. So so we put this on YouTube, and yeah, man, just keep an eye out for the next episode.
All right, I'm going to follow you guys.
Thank you.
All right, and we would also like to thank you, Shateka, for giving us the time and opportunity once again, to have somebody qualified as yourself to come on the show and give our listeners some insight on financial, as far as life insurance.
My pleasure.
Because a lot of our people don't know about it. So
I just wish we can get more about people to help us, with the business.
Yeah, we just want to do our job and try to push it out as well. So after everybody, do a little, nobody has to do a lot. So that's the way I look at it. So
yeah.
But yeah, so we'll follow, catch you guys on the next episode.
All right.